G'day everyone, welcome back to another update for gold and silver. Now we're going to do some back testing on this, but now we've got also new highs on both charts, but there is still a divergence in play, so just be aware of that. Make sure you hit that like and subscribe button to support the channel. Also, don't forget the +1 videos where we look at a deeper dive into some of the trading strategies we've covered previously. In terms of the outlook, gold and silver remain 2025 standout assets driven by global instability and safe haven demand. Gold is held above $4,000 an ounce, while silver's industrial and defensive roles amplified its gains. Near-term direction hinges on inflation data, Fed policy tone, and geopolitical tensions, with consolidation likely unless a new shock or policy shift reignites momentum. And this is just a quick chart for year-to-date returns showing gold and silver performance compared to the S&P 500, but also note the GDX or the gold miners ETF, which has performed even stronger. So if you're a regular to my channel, you know I always look at the long-term trends right down to the 1 hour chart. And the reason for that is we always go in the direction of the higher time frame. So if you're trading on the daily, we look at the weekly trend, or if you're trading on the intraday, like in this case, the 1 hour chart, we trade in the direction of the daily. So I'll show you the example of how that works on the back test in a moment. But first looking at the charts. Now in our previous update, I've got these trend lines. You can see there I've drawn this trend line on the CCI, so it's a still slightly lower high on the CCI versus the price has risen. So whenever you get to see increasing highs on the price versus slightly lower highs or lower highs on the CCI 150, that indicates a bearish divergence, so we may see a pullback at some point shortly. That's the weekly. The daily, likewise, we had a resistance up here where this previous trend line was drawn to, and since then it's actually risen quite a bit since then. Now we've got a very long-term bearish divergence here as well. That is about double top, if you like, almost equal to that previous high there versus higher highs on the price. That's still a bearish divergence. So as soon as that goes a lot higher on the CCI, we're going to invalidate that divergence. But at the moment, it's still a bearish divergence, which indicates it very likely will come back down. Hasn't started yet, but we'll keep an eye on it. So for silver on the 1 hour chart, again, looking at it's a bit of a slow movement here. It's actually risen, hit this support resistance level here. And what we look for on the 1 hour chart is any other divergence. And you can see there that CCI is moving in line with the price in terms of the highs and the lows. The last divergence we had was here. We had a double top there on the price versus a declining highs on the CCI, and that pulled back and hit our 23-38% Fibonacci range. And the way we measure that as a minimum retrace, we draw Fibonacci back to the low before that divergence started, and that's measured by that 23-38% Fibonacci retrace. In this case, it fell right down to the 50% level and bounced. It could say sometimes it just touches it and bounces, other times it falls right through. And in this case, and sometimes it even falls right below the 100% retrace level. So it could go anywhere. We can't tell how far it's going to go. And I use these divergences to get out of trade. So if I'm going long during this period and I notice a bearish. So as far as the back test goes, again, we've got two charts here, the daily chart on the left and the 1 hour chart on the right. And that's what we're trading here. So what we look for is, first of all, we make sure the daily CCI and the price are above the moving averages. And that would have been a beautiful area to go long at that point there. That's indicated here on the 1 hour chart. So again, trading on the 1 hour in this case, you let it go with the moving averages on the price and the CCI in moving to the upside, and you start closing them out as soon as you see a bearish divergence. Now I've zoomed out deliberately here. I don't like zooming in too closely. So you can see there's a decline on the CCI versus the price still rising. So you watch carefully the moving averages on the price. And as soon as you start seeing a decline, especially during this period of a bearish divergence, you might start taking profits. Now, in this case, the price appreciated. If you closed it out there, for example, you would have started going long again at that point with the CCI and the price moving to the upside. And again, notice another bearish divergence, and you would have closed it out once you start seeing the price break below the moving average there. That CCI is giving you, again, another warning that very likely we're going to see a decline, and we did at that point. Okay, avoid long positions during that little decline and then start going long again when the price and the moving average of the CCI start turning to the upside. Again, another little bearish divergence, and as soon as the price breaks or the moving averages on the price break to the downside, take your profits there. That's basically how you do it, and that's why we look at the 1 hour chart in this case. And as I said, there's no divergence currently on the 1 hour chart, so you can happily let it go. So for gold on the weekly, first off, again, on our last update, we had this declining highs on the CCI. That's pretty much the same position there, and the price has risen very slightly for gold, not as much as silver did. So still a bullish movement on the price, but again, a bearish divergence on the CCI. So be careful of a pullback. I've already drawn a target range there, and we'll see how far it does drop if it does start pulling back there. On the daily, again, we had a resistance there at 39.76 previously. I'm going to raise that to that high there. Also raise that trend line on the price, but also the trend line on the CCI. That's still very slightly lower than that high there. So again, another bearish divergence, and there's another 23-38% Fibonacci range at that point on the daily gold chart. On the 1 hour chart, again, from our last video, we're going to raise that trend line to that high. You'll notice here the CCI kept dropping after that last period where we marked it. So I'll just leave that there for the moment. That's enough because the other highs are still lower. That was the highest point there. So in which case, let's see if it's actually hit the target range. So what we do now, so that divergence range went from that point there to that point there. So we'll bring back the Fibonacci down to that level. So what we do is we mark that high down to that significant low before the divergence started. And you can see there, it's already hit that. Let's make sure we get it right. That 23-38% range. And what it's doing, it's fluctuating in that range. Doesn't mean it always does that. It could actually, as I said, it could fall a lot further. But at the moment, the CCI is dropping. The price is still bearish. So I wouldn't be going long on gold at the moment. That could be the start of a bigger downturn. So the hourly's already dropped, hit its divergence target. So let's see how far, if it does fall further, whether the daily will hit its target, and then likewise the weekly. So at the moment, avoid going long because of this hourly decline. Now we look at the back test. Again, going long when the CCI broke above the moving averages, and so did the price. That's indicated here on the 1 hour chart. And you can notice similarly, you'll get these various divergence. Again, that little period there versus those peaks there. That was the first bearish divergence. Now in this case, the price kept rising. Let it go. You're waiting for the price to start breaking with the moving averages bending down. It's a bit hard to see there, and I don't apologize for that, because you can see there if you zoom in a bit, I want to see those moving averages turn down and the price break down. So you might have got out of that long trade during that period there. Let it go, and you wait for the price, in this case there, and the moving averages on the CCI breaking up. That's where it's into those little contracts there. You let it run. Now I like taking a 0.03% gain. I like taking small gains and getting out of the trade, rather than waiting for moving averages to start turning down necessarily. But it's up to you which way you want to do it. Again, letting it go if you wanted to, and then getting out when the moving average on the price starts turning down. Now, in this case, you also had another bearish divergence. I haven't marked all of them. There was one point there to the same period. Then you had another one there for that same period, etc. And that is not a divergence. So up until there was a bearish divergence. And this longer term one, sometimes you got to zoom. That's why I like to zoom out. Sometimes you can see better when you zoom out on these charts. Now, like I said, on the hourly, where we are at the moment, it's already broken down, hit its minimum Fibonacci divergence target there, and the CCI is still dropping. And also notice as well, even though the price is above the moving average on the daily, you pay attention to the daily CCI as well. Now notice here the CCI is almost peaked, and it looks like it's going to start to turn down. So again, the daily's got a bearish divergence, and very likely we're going to start seeing the price pull back. Let me just remeasure that, make sure it's accurate, because we have moved it slightly from that previous position. So you can take it back there, but what I like to do is take it back to the significant low before the when it broke below the moving averages. In this case, the price is still above the moving averages, and that's why that needs to be adjusted. So it's going to go there, the 23-38% range. So that's how I draw that, and that's where I expect it to break as a minimum. As I said, it could just touch it and bounce, or it could actually fall right through it. We don't know. So again, always pay attention to the divergence and the trend on the daily, but also the divergence and the trends on the 1 hour chart if you're trading on the smaller time frames. So to support the channel, make sure you hit that like and subscribe button to support the channel. And if you enjoy the content, subscribe at less than a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.